But it's interesting because there are drawbacks to velocity banking. There are drawbacks to First Lien HELOC. And the critics miss what I consider to be some of the biggest drawbacks to velocity banking. They're living in their spreadsheets and they're focused on interest rates and amortization schedules and things like that. In my opinion, the biggest drawback to velocity banking is something that our critics will never bring up because they're not working with their clients on a regular basis like we are. The biggest drawback in my mind with velocity banking is that it puts pressure on your cash flow. In order for velocity banking to work, you must not only have positive cash flow, but you must have enough positive free cash flow and or liquid savings to pay the interest down or to pay that debt down quickly enough. Otherwise, it can work against you where you're not paying the principal down, or at least there's more interest that you're being charged than would otherwise happen.
Absolutely.
This is not coming from Mr. Moss, but I've heard other critics say we present these rosy scenarios. And again, maybe on a YouTube video, but if I actually have someone in a consultation, we're going to stress test it. We don't do what other people do in the financial space where they present it as if you're going to get 12% returns in the market like clockwork. We don't do that. We actually stress test and say, what happens if you have no income for 6 months?
Yep.
You lose a job. What happens if interest rates go up 2, 3, 4, 5 points?
Yep.
What happens if you have an illness and you have to pull 50,000 back out? Run all those scenarios and see what it looks like. We want to build in fault tolerance to our models. We want to make sure that you have enough extra room that can still succeed even if interest rates go up and if your income suffers. So we absolutely do run those scenarios to help the client understand, here's what it looks like if those things happen, because you both know, DeAndre, those things will happen.
Yeah.
They will happen. It's just not when.
Yeah.
Or when.
I like that you mentioned that, because this is my criticism to critics of velocity banking people. What advocacy is the person typically getting from what they usually do? What advice are they normally getting when you close on a mortgage, for instance? Is there somebody that accompanies the mortgage loan officer to make them aware of the downsides of if they don't make any money for some time, they can't make the payment, this is likely to happen, make them aware of how to balance this off, how to be more efficient? You don't see that at all. So it's always easy to criticize a person who is working on something, even if it may not be perfect in your summation. But I would levy, have you ever sat with a mortgage loan officer who thoroughly went over the paperwork and told you all the downsides if you lost your job, if taxes go up and you can't afford it? I don't think that happens, period. For the velocity banking guy, I do it all the time. I show them how much the balance will go up if they're out of work for a certain amount of time and they're just working on their basic needs. I show them if interest rates go up 2, 3%. I do all of that stuff. I don't think that happens at all for them on the other side of the equation of what they're typically doing. So the failure rates are higher in traditional financing and finances because there's less assistance and support. When you get a mortgage, flip page here and it's the corner of the page sign, corner of the page sign, corner of the page sign. So you don't have any heat for that, but you have all the heat in the world for somebody's like, hey man, let's use a spreadsheet. Let's go.
As compared to what? As compared to what? And you're pointing out the human element. That's a huge part of these people miss. Denzel Rodriguez, his clients succeed because they have Denzel Rodriguez, not because they got a First Lien HELOC, not because they're doing velocity banking, not because they took out a whole life policy. All those things are part of the strategy. The reason why they succeed is because Denzel Rodriguez is there advising them, helping them, holding them accountable, helping them manage their emotions. As Denzel would say, he's 80% psychologist, 20% financial efficiency coach. And that's so true. Because in theory, any number of these strategies could in theory work.
Yeah.
theoretically. And the question is not which one looks the best on paper. The question is which one suits you and is actually going to work the best for you. And a lot of that depends on your specific goals. You can show people all day long that paying off their mortgage faster might not be the best thing to do if they got a low interest rate mortgage. But if they just want to be debt free, that's what they should do, because psychologically it's going to be better for them. They're going to have more peace of mind once they're debt free, as an example. So you're right. The human element is so important, because a lot of our critics, I think, they seem to look down on human beings and they seem to see no value in partnering with another human being. They only see value in a product, and that's it.
Yep.
They don't even necessarily see a strategy. They just see a product. And yeah, no product is going to work by itself. It works in the right situation with the right person and the right strategy.
Yeah. And I see often too, throwing the baby out with the bathwater because of hype. So just because it's
Right.
become popular doesn't mean the intent behind it is wrong.
Just because something is hyped up, or a good asset can be blown up into a speculative bubble, that doesn't mean it's a bad asset all of a sudden. And you're right. When you say popular, that's a relative term. But
Well, yeah,
it's still very small
because
and
they're
relative
hearing
to the
about
rest
it
of
more frequently that, hey, there's another way. Because
Right.
I could argue that before velocity banking came around, I don't remember seeing any videos or any criticism of anybody teaching how to pay off debt.
Yeah. Good point.
I don't remember seeing anything. So one thing that is a counter to your, okay, people lack financial education. Well, for many years, no brains were activated into how to better their situation. They just kind of, well, I think maybe making biweekly payments might work. Maybe an extra $100 towards my mortgage. Yeah, it'll do it. But they didn't really have anybody on screen actively saying, this is what you should be doing. This can work if you do this. I've never seen a velocity banking person act as though cash flow wasn't the most important thing to make it work. Not one of them. So that's another thing. You're talking about how dangerous it is. Every last one of them convey that your cash flow matters more than the interest rate in this environment. Make sure your cash flow is very strong before you start this process. There's not a velocity banking person who doesn't say that. Even if you want to paint rosy pictures, none of them say velocity banking with zero cash flow.
And that's one of the benefits of both infinite banking and velocity banking, is it gets people focused on the right things. Cash flow. Most people are trained to be myopically focused on, let me take the small amount of my cash flow that I'm actually able to save and put it into some investment vehicle that's going to promise me some rate of return, and I want to squeeze out the maximum rate of return. And that's all they're thinking about. They're ignoring the rest of their financial picture. There's so many other ways we can optimize that will get you more immediate, concrete, tangible benefits. Increase your cash flow, efficiently pay off debts, get you covered with insurance, reduce your taxes, increase your income, all kinds of things we can do that'll give you much better benefits. And then by the time you get to investing, you'll have more cash flow available and you'll be able to invest with more safety. And probably now that your mindset has shifted, you might not want to just buy mutual funds. You might be looking for something that's going to give you cash flow rather than lock your money up in jail and just hope it goes up in value. You might not view that as attractive of a proposition. You might look at yourself in the mirror and say, maybe that's my best investment. Maybe that's where I need to be investing.
Yeah, there hasn't been any popularized financial strategies other than buy term and invest the difference. There were none that focused on money management outside of infinite banking and velocity banking. There were none that were popular before then. Maybe debt snowball is. So it's not that many strategies that have been popularized in regards to money management, because buy term and invest the difference is not a money management strategy. It's an investment strategy.
And I think it's important to point out that velocity banking and debt snowball are not in conflict with each
No,
other. It's a
they
false
work
dichotomy.
perfectly with one another.
Denzel Rodriguez would talk about that.
Yeah.
And I think our critics are setting up false dichotomies. Like we're saying it's black and white. You do this or this, and this is always good. You do the mortgage or the first lien HELOC, and the first lien HELOC is always better. No, actually, as DeAndre pointed out, even those of us who promote it recognize that in 70 to 80% of cases, it's not the right move. For me, debt payoff is really not a priority. The only time I prioritize debt payoff is if we have something that's charging, let's say, double-digit interest rates, where we really want to remove that. And the main reason why I don't push velocity banking with my clients is because we want to do infinite banking. And I do not want to take liquid savings and cash flow that could be applied to building your infinite banking system and apply it to debt reduction or velocity banking instead, because the opportunity cost of not starting our whole life insurance policy earlier is going to dwarf the interest savings. Unless we're talking toxic debt, credit card debt, double-digit interest rate debt.
Absolutely.
And if you have that, I'm going to ask the much more important question that none of our critics ever ask, which is why? How did you come into this debt? That's what I need to understand.
Right there.
Because once I understand that, I'm going to be better able to advise you. If you have a spending problem, I cannot help you. That is not something I can fix. I would recommend you work with Denzel Rodriguez. Do the Dave Ramsey method. Get some financial discipline.
Get it under control.
If, on the other hand, like a business owner example I gave you, where he could explain to me that credit card debt was because he was running a business, he bought a business, there were a few things that happened, and he has a good credit score. Okay, so now velocity banking probably makes sense for you.
Right.
But I have to go through those psychological
Question.
criteria first.
Yeah.
Not just cash flow, but psychology. Because like you pointed out with the surgeon, I don't care how much income you have, you can spend it. I've worked with clients who have relatively high incomes, but they have a spending problem. This one guy, he took a voluntary severance package, had a lot more cash in his pocket than he was used to. And on the one hand, he tells me, we've turned over a new leaf. I've been living paycheck to paycheck. We're going to stop doing that. And then in the next sentence, he tells me, I need a new car. Just dogmatically, I need a new car. I didn't respond because I could tell he was not going to be receptive to me telling you, you do not need a new car. Okay. You do not need a new car.
Hilarious.
So he goes out and he talks about how amazing the deal is that he got with financing. And now he's got a $900 a month car payment. You know what will be better than that amazing financing deal? How about not having a $900 a month car payment? You have a spending problem. You have a spending problem. And if you have a spending problem, I'm probably not the best person to help you with that. There are people who are better at helping you with that.
Write it down for you. Yeah, that's true.
Definitely not. What else you got, DeAndre? Anything you want to say close for Mr. Moss?
I appreciate Mr. Moss's points. I appreciate that he even commented. I just always ask people to be even in their representation of how they feel about these things. No matter how you split it, people starting to get more engaged into understanding their finances is always a good thing. I can't view that as a negative. Even if it was a person who had curiosity and taken an appointment, if they start to get on their spreadsheet on their own, that's good. I like what you're doing, Mr. Seamoss. I want everybody to do it.
And I'm not being sarcastic, Mr. Moss. I would love to see you start your own YouTube channel, website, start putting this content out there, because I think you are giving a very healthy corrective, very helpful nuances to say velocity banking doesn't work the way you think it does. There's some important caveats that are missing. You're not comparing it to another scenario. What does this actually look like? Because I agree that velocity banking gurus make it seem like it's the greatest thing since sliced bread. They make the mortgage seem like it's this awful, horrible payday loan, and the banks make absurd amounts of money off of it, et cetera, which, by the way, I'm not against people making money. I don't care how much money they're making, as long as it's doing well for me, fine. So I would like to see you do that. And I think the best way, Mr. Moss, for you to address the dishonesty that you're seeing, or I'm not going to call it dishonesty, the misinformation and half-truths that you're seeing in the velocity banking community, is not to put negative comments in their YouTube channel. The best way, I think, for you to address it is to create your own YouTube channel, create your own website, start promoting your own content, and give people an alternative. If
Yeah.
you really want to help people who are being hurt by velocity banking, these hypothetical people who may exist, then go and find those people and actually help them. I think that will be much more satisfying for you, because instead of I won an argument, you'll be able to say, I actually helped this person. They were in debt. They were hurt by a first lien HELOC,
Mhm.
and I helped get them into a better vehicle. We refinanced the first lien HELOC back into a mortgage. We're doing a more conventional strategy that makes sense because I showed them how the numbers were bogus. And there's satisfaction you'll get from them. And then the more you do that, Mr. Moss, the more you'll start to appreciate what DeAndre and I see all the time, which is the psychological impact that these various strategies can have. There's no one right strategy for everyone. The strategy that applies to you depends mostly on your psychology. Cash flow and everything else matters too. Of course, the numbers do matter. I'm not saying they don't matter. Don't put words in my mouth. I'm not saying interest rates don't matter. They do matter.
Right.
It's just not the only thing to consider. Because if you have a spending problem, I don't care how low interest rate your debt is, you're not paying it off.
The other thing, don't insert your assumptions because of consumption of content. There might be an inference that many people are getting approved for first lien HELOCs.
Right.
It is not easy to get approved for a first lien HELOC.
No.
So while you may be saying all of this about all these people who are hearing this information and they're getting hurt by it, I'm shocked because when I talk about first lien HELOCs to any advisor, any regular person, almost no one knows about it.
Right.
Almost no one knows about it. So I'm trying to figure out where's the data that there are so many people being hurt, because it is way harder to qualify for a first lien HELOC than a traditional mortgage.
Not
Yeah.
only that, I would like to know who actually worked with Denzel Rodriguez and got hurt. I
And
would
got
like
hurt.
to know that,
Yeah.
as opposed to someone who just did it on their own. Because I could say, I'm going to go invest on my own and then blame Warren Buffett because my investment strategy blew up
Right.
because I copied what Warren Buffett said in a webinar. Maybe I shouldn't be doing that by myself. Same thing would apply with velocity banking or infinite banking. If you try to do it yourself, then you only have yourself to
You're only
blame
your-
when it blows up
Right.
on you. Don't blame the person who's educating you, because obviously what I and others are trying to do is to get you to engage with me. I'm not telling you to go do it on your own. I didn't say that. Don't put words in my mouth. You need to be working with a qualified expert. I've said that more than once, because I do get frustrated with people who consume my content and then try and do it on their own.
Yeah.
And it doesn't work out well for them. Why, if you're taking this seriously and you understand the benefits, why wouldn't you want to work with someone who can help you maximize it? That just doesn't make any sense. Pay off your house in 5 to 7 years. That's not just a marketing slogan. We have the data to show this is actually happening. I'm not aware, DeAndre, of a single foreclosure on a first lien HELOC.
Well, why do you think
As
I
the-
keep
if they're-
hearing
if-
stuff about data?
Yeah, I would like to see it.
Yeah.
As far as I know, there has never been a single foreclosure in this first lien HELOC program. I could be wrong, but if there's been one or two, still that's nothing compared to
Compared
mortgages.
to traditional mortgage.
And when we say people paying off their house in 5 to 7 years, that's not just a marketing slogan. That is based on actual real data.
Yeah. The things you view as half truths, some of them could be whole truths. You're just not in the know. And I hate to say that way, but trying to insinuate that velocity banking experts are the ones saying banks make more money off of mortgages. You know who tells velocity banking experts that? Mortgage loan officers. Mortgage loan officers want the HELOC to have a certain amount of debt because they can't make that much money off of the HELOC versus the mortgage. So you may not know that because that's not what you're actively dealing with on a regular basis, is mortgage loan officers trying to get your business or trying to get you to refer clients to them. But we
Right.
deal with that.
Right.
So we know that mortgage loan officers are like, hey, bro, don't come to the table with this if it ain't got this much debt. Oh, well, would you sell a house with that much debt? Yeah, absolutely. I sell a mortgage, but these is too much more work. Exact words from mortgage loan officers. It takes way more work to write the contract for a first lien HELOC than it does a mortgage, and they get paid much more from a mortgage than they do a HELOC. That's from mortgage loan officers. That's not from velocity banking experts. So you might be assigning blame to a velocity banking expert over certain things they've said. And you may not know the origin of what they're saying. That's the origin. If you're talking about compensation from the bank and how much money they make, that's not a predatory statement that a velocity banking expert is saying. That's him just
Right.
regurgitating that every single mortgage loan officer that I deal with, they don't even want me to approach them unless the debt is this much on a first lien HELOC.
And that doesn't make mortgages bad or evil. Let's be clear. Just because they're profitable, there's nothing wrong with that. I want to set up win-win
Absolutely.
scenarios.
Doesn't make 'em bad.
Wealth is not a zero sum. I am not going to do what our critics do and criticize other people because they happen to make money and sell profitable products. You
Right.
should be selling profitable products. That's good business. So if you make profits, that indicates to me you run a good, healthy business. I do
Yep.
not want to be a parasite.
Yep.
So just because the mortgages are profitable for the bank doesn't mean it's bad for the customer. Quite the reverse. I think a lot of people have mortgages, and for the average person, a mortgage can oftentimes be the most effective
The
debt
most
tool
effective
that
thing.
they can get
Yes.
access to. It's not a payday loan. It's perfectly fine. I'm not against mortgages. I have plenty of clients who have mortgages. I don't jump down their throats and tell
Nope.
them to immediately refinance it to a first lien HELOC. In most cases, we just leave it alone and keep making the minimum payments on it. And that's usually the right thing to do.
That's it.
Not even making extra payments, because why would we pay it off any faster than we have to? It's such an efficient form of debt.
I just wanted to get that part out because you have to assign the blame where it belongs. And so if you feel like certain ways a mortgage is being portrayed, now from a debt perspective, I agree. If people are saying that a mortgage is prison or it's bad, you're on spot. But if you're trying to suggest that any velocity banking guy is trying to up or ramp the danger of a mortgage, uh, you don't have to up or ramp the danger of the mortgage. You could look at data on foreclosures and say which one are people more apt to be foreclosed in. And I don't think that's because the mortgage is bad, because I don't think the mortgage is bad. I think what it is that there still is a lack of education connected with that particular tool, just like there could be a lack of education connected with anything else. What you see with velocity banking guys is that they have a tool and they're trying to provide education about said tool. They're educating you.
Right.
Yeah. So that
You know what this reminds me of? One of the reasons why the first lien HELOC is so successful is there's a vetting process that goes into those borrowers that's stricter. And there's an educational process where they have an ambassador like myself or DeAndre that's working with them to make sure you get the best possible result. Oftentimes there are diet and exercise strategies that get criticized because they're not the most optimal. But when you dig into it, you find out that a lot of people are succeeding with them because they're the sort of people who are actually doing the research, who are actually interested in their health, and they have a fitness coach, they have a nutrition coach or someone like that who's helping walk them through it. And so they say, look, I don't care what you say. This is working for me and I'm going to keep going with it. Maybe it's not the most optimal strategy, but because they're the sort of people who actually put priority on it, who actually research it and have people helping them to do it, they end up more successful. So the first lien HELOC has drawbacks, certainly. But when you look at the process that's involved in being sold and signing up for and executing on a first lien HELOC, they end up being more successful because with your mortgage loan officer, after he sells you the mortgage, he's done. There's no long-term relationship. He's done. There's nothing else for him to do. Whereas with the velocity banking, that's the beginning of the relationship.
Yep.
We put this tool in place and I'm going to help you execute on the strategy so your house is paid off in 5 to 7 years.
The organization that actually placed the first lien HELOC, they even do monitoring on the account to see if it's going in the opposite direction. And they contact the ambassador and say, I noticed that there wasn't any income coming in through this particular person. Did they lose their job? Are they aware of how this tool is supposed to work? So there's more accountability on the side of velocity banking than there is in your traditional model. Your traditional model is everybody for himself. To negate
Yep.
that that's the truth would be very dishonest. It would be very
Yep.
dishonest. So
Yep. First
like,
lien HELOCs are only sold as part of an overall strategy with a financial professional involved. They're not sold as a commodity the way that mortgages are. And there's nothing wrong with mortgages. Let's be clear. They, in many cases, are the better option than a first lien HELOC. Both are tools, but I would agree with Mr. Moss that the first lien HELOC does require more
yes,
education. It requires a more responsible person, a more engaged person. That's why we have the ambassador program. Whereas you don't see the same thing with the mortgages, which, in fairness, as long as you can make your monthly mortgage payment, it's not going to blow up on you. It might not be ideal, but it's not going to blow up on you as long as you can just make your payment. Okay, DeAndre, thanks so much for your time. Mr. Moss, thank you for commenting.
thank you,
I look
Mr.
forward to
Moss.
seeing more of your comments
Thank you, Mr.
in the
Moss.
future.
We appreciate you.